Hi, this is Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. Today is June 13th, and I wanted to dig into the question and what I'm seeing in some reports of we're in a housing correction or we're going to have a housing correction. I wanted to talk through that real quick. First, let's talk about the YouTube algorithm. Please click the like button, subscribe, ring the notification bell so you can get notification when new content comes out. I'm trying to get this information out, fact-based, data-based information, and then also my experiences in the marketplace as well as a full-time realtor. So please do that. And if you have any questions, comments, if you disagree with anything, throw some comments down in the comment section and let me know. Could I say comments another time? So anyway, let's talk about new listings. There are 903 over the last few days, 861 last week. So that's good. We've seen the number of houses on the market click up a little bit, 5,600 versus 5,500 last week. And we're at 674 new construction, which is up a little bit from the previous week. So these are all good things. I do want to emphasize we should be in the 20 to 25,000 range for houses on the market. So we are extremely low inventory, even at that 5,600. So just something to keep your mind on. I'm starting to sense it, and I'm talking to a lot of other agents who are telling me the same thing and just seeing it in the numbers. We are seeing a little bit of a transition, a little bit of a change in the market dynamic. I think a lot of that is related to people people that are buyers are starting to step away a little bit as prices continue to climb and as mortgage rates go up. And we are starting to see a few more houses come out of the market. So that's changing the demand to supply ratio a little bit, but it's still very, very much in favor of sellers. So the question: are we in a market correction for real estate? So the first thing we want to look at is what are prices doing, because a correction is talking about price, right? So if we look over this over the last 10 years or so, you can see it's all positive. It's increasing prices consistently. Now the last year and a half or so, it's been huge, like unprecedented price increases, really big. That's driven by the extreme low demand the extreme low supply and the extreme high demand. So we are seeing both of those kind of temper themselves a little bit. So I do expect this to come back down over time, but that's what we're seeing right now. You can see across all regions, we are seeing price increases consistently year over year. Let's talk about the definition now and talk about what we're expecting to see going forward. So the definition of a correction is a decline of 10% or greater in the price of a security asset or market. So we just saw that historically prices are going up, not declining. So are we in a correction right now? Absolutely not. Could we be going into a correction? Sure. I mean, I don't know. I don't think so. The data does not prove it, but is it possible? I don't have a crystal ball. I can't tell you 100% that there's not some black swan event coming around the corner. But from what I've seen, all the data that I'm showing is that no, we're not going into a correction. So that's kind of where I am right now on that. The prices are up, continuing to go up. They're forecasted to continue to go up the rest of this year and into next year. And supply is so very low and demand is so high that we are continuing to see that price. We're seeing reasons why the price would continue to appreciate. The next people say is, oh, we're going to have a recession and that'll cause a housing crisis and a housing correction. And so let's look at the last 40 years right here. You can see that 4 out of the 6 housing prices continued to go up even during the recession. One of them, 1991, is down by 2%. And then the other one is 2008, which stands out like a sore thumb, right? Down almost 20%. But let's talk about 2008. 2008, the housing correction is what caused the recession. It was banks being extremely irresponsible in their lending practices, causing the real estate market to collapse, which caused the recession. So in this particular case, the recession didn't cause the housing problems. The housing problems caused the recession. In every other case, there was not a correction. So there's nothing to that claim that a recession is going to cause a housing market correction. This chart is very accurate. I mean, it is the data. It's real data, but it's representative of what we're seeing in Connecticut. There is an extreme low supply. We are at 5,600. That is about a little bit less than a month and a half of supply. We like to have 6 months or so. So we're very low on supply. And even though a few people are starting to back away as buyers, there's still a lot of buyers out there. And though the number of buyers still definitely outstrips the number of sellers, so we still have an imbalance, which is going to cause a little bit of price appreciation as they compete for those houses. Let's talk about the primary mortgage market survey. We're at 5.23, and as you can see, if you look at the chart, we've kind of plateaued in that 5.1 to 5.2 range. And echoing, predictions that other people had made, I had said in the past, it looks like we're kind of priced in what the Fed is going to do, and that's what other experts had said, and I agree with that. The question is, with this most recent inflation report, we were at 8.6%, which is much higher than what was expected. What's the Fed going to do now? They're expected this Wednesday to do a half-point increase. Do they do a three-quarter point instead? And what does that do to the market? I don't know, but that's something that we're going to need to keep our eyes on as we go forward, because what the Fed wants to do is it wants to drive that inflation down, and we're not seeing that yet. And I want to bring this slide into the discussion, as I do every week, just to give you a little bit of perspective. So 5.23%. It's above the recent 2 to 3% that we've seen, but it's well below what we've seen in the 70s, 80s, 90s, even the 2000s. Back in, I think it was October of 1980 or 1981, it was 18.44% is the interest rate, significantly lower than that. So 5% interest rate, although it's not as good as the recent past, it is still a very favorable rate, and something that, if you need to buy, if you want to buy, it is a good time to get in there. And again, if interest rates drop off, there's always an opportunity to refinance. So hopefully there's some value in this. Hopefully looking at the data and listening to my experiences in the market, it gives you a little bit more sense of what's really going on out there rather than the hype headlines. And if you do have any comments, questions, please throw them in the comments below. Other than that, have a great week, and I'll be back later on this week with another update. Have a great day.